Good morning, everyone, and welcome to the daily live market analysis and trade plan setup for Thursday, October the 17th. For those that are watching on YouTube or visitors from Twitter, this is Quantum Leap. We are a self-organized learning environment. My name's Doug McKay. I'm the head moderator. We've been running a Skype chat room for about 4 years now. If you're interested in checking out the room, you'll need a Skype account, but you can send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Of course, you can contact me through email at dm@m4connects.com or call me on my direct office line after trading hours. What we do each morning in here is we come in and go through a morning routine. We start with the macro to the micro numbers, looking at all the key numbers that we watch, and then we do a basic trend analysis on the macro to the micro. So if you're watching this after the fact on YouTube, you might want to skip ahead to more of the in-depth chart analysis. Of course, before we do anything, we have to get the disclaimer out of the way. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions made. Trading futures or any instrument involves risk or loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades you see in here are for educational purposes. Please trade your own plan. Do your own due diligence. All right, so let's get right to the numbers. Our year high is still 1726.75 put in the Globex. Our RTH high is 1723.75. I was surprised that we actually didn't go and hit that yesterday. I thought with the impending news of the deal that we'd get a bigger spike than we didn't. Maybe it was too priced in already, but we seem to have been stalling. Should be interesting on the open to see how the RTH traders handle the day after the news. And of course, I haven't seen any of the major announcements, so maybe there's more stuff to come out. But our high of the year is still intact. Our all-time high is intact at 1726.75. We're nowhere near our year open or lows. We opened the month at 1678.50. We have a month high at 17. You can see we're trending up on this. Our month low 1640. Our previous month we opened at 1640 and a quarter. We had a high of the all-time and the year high at 1726.75. Our previous month low 1630.75, and our previous month close 1678.75. And we're trading above all of those numbers right now. Our week open 1684 in Globex on Sunday. Our week high is trending as well, 17. Our week low 1680.75. Previous week 1676.75 open, 1700 and a quarter high, low 1640, and we closed at 17. We're trading above all of these numbers right now. Nothing new on the quarterly, although our new quarterly high, oh no, it's not. It is 17. Our Globex opened yesterday, 1694 and a quarter. We had a high of 1706.50 and a low of 1691 and a quarter, and then we opened the RTH session at 1702.25. We had an open auction in range. We broke the IB to one side for a normal variation day. Our opening swing high 1705 and a quarter, opening swing low 1701.25. And again, remember we said that 1704 area and then the 1706.50 was the two major areas that if we breached that we'd go up, and we had that energy point that we are looking at above, and we'll take a look at that when we get to the geometric chart. So we had a 4-point opening swing. The initial balance high 1713.50, initial balance low 1701.25 for a 12 and a quarter point initial balance. Pretty large initial balance, but we made most of the move very quickly in the morning. Our 1230 number was higher at 1714.50. Our RTH high was higher at 1717. Our RTH low was higher at 1701 and a quarter, and then we closed the day near the highs at 1713.75, and our VPOC shifted up to 1713. So we're holding value up here, and we're still sort of trending upwards. Our daily range RTH 15 3/4, full session 25.75. That was a big move, both in the Globex and in RTH. Our Globex range 15 1/4. Our full session high 17.17 put in the full session. Our full session low 16.91.25 put in the Globex. Our 20-day ATRs 15.5 for the RTH, just over 19 for the full session, and our Globex 10.5. Last night we opened the RTH at 17.12. We had a European cash close yesterday, 10:30 number. All numbers in here are Central Time, 17.13. Our value area high 17.16, value area low 17.10.50, both higher, and you can see the trend is continuing there for a 5.5-point value area. We broke the IB outside of the pocket, just outside of the pocket. We've been running a time study for the initial balance break. The highest probability is breaking it within the 9:30 to 9:45. The second highest probability is between 9:45 and 9:50, and that's an IB break to the high or the low. This one happened to be the high side. Our extended session, the 3:30 to 4:15 Central, extended session high 17.13 1/4, extended session low 17.12, full session or extended session close and settlement price 17.12.75 for a 1 1/4 point. So much smaller than we had the prior day and under the current 20-day ATR. Volume was slightly heavier again at 1.5 and 1.7. Going over to the daily report, CHVNs and CLVNs, there's not much up here, but the 17.75 is still the CHVN to keep your eye on. Right now, you're going to be watching the 17.06 1/4 this morning. I'll talk about the LVNs when we get to the volume profile chart. We took out 2 of the naked crosses that we left here. I've been running a study for a couple of years now. I use the 9 EMA and the 20 SMA, and when the 9 EMA crosses over the 20 SMA and price action moves away, it leaves that price unoptioned, tested, and or naked, and the market has a very high probability of going back and re-auctioning and retesting that price. And we watch them on the 5, the 30, and the 15 for intraday trading. I also watch them on larger time frames, but not for my intraday trading. And it's a very high probability target, and we look for confluence between that and other methodologies. But if you do the research yourself, you find that it's pretty darn accurate. It's very rare that we leave something naked for a very long time. So we took out 2, one on the 30, one on the 5 at 17.16.25, and then we added 16.99.75 on the 30, 16.95 1/4 on the 15, and 16.94.75 on the 5 minute. And then we've got a couple from overnight that we'll put on the trade chart. And then we didn't take out any naked VPROCs, but we did add yesterday's VPROC at 17.13. Going over to the news, we had unemployment claims. We have Philly Fed coming up at 9 after the first half-hour trading. We got natural gas, and of course we've got FOMC members speaking all this week, and then more headline news. Now, this is our homework sheet that Tara and I do, but if you're new to Quantum Leap, we put this out in the form of what we call our QLTP, which is our ladder above the previous day close, ladder below the previous day close, with all the different numbers that we're watching based on the different methodologies and different studies. And it's got the news on it for the day, a little work area, and Pearson pivots, open high lows. And this just gives us our traders a guide to know where other traders might activate and what type of confluence you have between the different methodologies. And as a member of the Quantum Leap, you get this posted into the room on a nightly basis. So let's, next thing we like to do next is go and take a look at the trend, make sure we know where we are within the trend on the macro down to the micro. You can see that the monthly trend is very much intact. We've got good separation of the 9 EMA and the 20 SMA, so we got slope and separation and prices paralleling the 9 EMA very nicely. This is very strong still. There's no sign of weakness yet. We have trading this month in the upper distribution and coming up to that all-time high at 1726.75. So the trend is very much intact on the monthly. On the weekly, we still have a possible head and shoulder pattern here. Of course, we've got to stay below the 1726. We did see the first sign of weakness with the weekly close below the 20 SMA on the weekly. It was the first time this year. We came down. It looked like we were going to get our second close below the 20 SMA. Of course, we had news and we popped back up, and we're currently trading above the 9 and the 20, and we're starting to get slope and separation on the 20. So right now the weekly still looks strong. It showed us some weakness, and kind of completed a possible trough for this right shoulder for a head and shoulder pattern, but we don't know yet, and it's quite possible that this doesn't play out and we go up and make new highs. Going over to the daily, well, we kind of rolled over. We created that naked cross on the daily up there at 1687.75. It looked like we were starting to trend down and weakness was coming into the marketplace. Then we had news. We popped back up, took out the naked cross. We've now closed above the 9 and the 20. There is a naked cross right here on the daily at 1687.75. But things look pretty strong, and again, possible head and shoulder pattern, but we don't know if that's going to play out again. Going over to the market geometric chart, I added a new fork in here just to see it's got some good frequency on it, but also what I think is interesting is the confluence we're getting in these energy points between the all-time long. This is the long-term fork we've been watching for many months. This was the counter trend fork that we added a few weeks ago. Then I added that modified shift one here. We had created that energy point up here that we were watching for. We went up yesterday and hit that energy point. We're now trading at the center line of the long-term fork and trying to see if we get above it. We're at the center line of the the modified shift chart, that shift fork that I added, and trying to break through that. Of course, if we get through that, then we'd be looking for a move to test the upper line of the long-term fork and then the upper line of the modified shift chart. If we can't get above that, we have broken out of the counter trend fork that we had added in this one right here. I know it's kind of getting confused with the amount of lines, so we've broken out of that one right now, but if we come back down, I'd be looking for a test of the upper line somewhere in around the 1696, and that has some confluence with the volume profile charts. Of course, the big area that we're looking at, and this doesn't come into play until about April, the possibility of coming down and testing this multitude of energy points between all these different forks that we're watching. Of course, this gives us time to still go up and have a blow off top before we come down. And we've got a few months before we get to this these energy points. But just keep it in mind for long term as possibility. Just going back over and take a look at the intraday charts, see where we are on the shorter time frames in terms of trending. We've got good slope and separation on the 4-hour. We popped up overnight, created that tech gap with the Mr. Sneaky, and we've now come down and closed the tech gap. Tech gap is where price action moves away from the moving average. I use the 9 EMA and creates this space which is a technical gap, and that technical gap will either get closed through time as the market continues to go sideways and the EMA comes up to catch up with it, or by price. Usually it's a combination of both, but we had a nice strong tech gap with that move yesterday, and overnight we've come down and closed the tech gap, and we're currently trading just above the 9 EMA, losing a little bit of slope, but we've got good slope and separation. So for me, this is just a tech gap, and a continuation is quite possible. Going over to the 30-minute. Tells a little bit of a different story here, where we've had the tech gap on the 30-minute, came down, closed it, popped back up, came down, and then we've closed below the 9 and the 20, and we were starting to trend down. They popped it back up and got above, and now we've broken back down, and we're trading below the 9 and the 20. So coming into the RTH session, we're seeing a little bit of weakness in the marketplace. So let's go over to the composite chart. We had come up here after coming down to that 1647 level that we were watching as an area to come down and pick up buyers. They came down here, they consolidated, picked the buyers up, created the microcomposite VPOC at 1649.50, gapped up again, and we found some balance in around here. Well, where did we find balance? We found balance around that 1695.25, which was the former area that they tried to hold balance or hold value after making the the first all-time high. This 1698.50 is the adjusted price, December price of that 1705 area that was the new all-time high. They tried to hold that value in around 1695. They couldn't hold it. Then we came down. We made the move down. Then went up and made another new high. That once they made the new high at 1723.75 in the RTH, they tried to hold value up here at 1775. They couldn't. They came all the way back down into that 47.48 that we were watching for weeks. Found the buyers. Now they popped back up, got up to that 95 level. Okay. Accepted value. Now they popped up again, and we missed that 1775 by basically 3 ticks. So and we're currently trading at 1705. So right now, the key line that you want to keep on your radar screen as your line in the sand, 1706.25. If we get below that, I'd be looking for a move back into the value area of this microcomposite at 1704, with the first target being 1703, and then the other side of that balance, 1701, and of course 1700, psychological centennial number. But if we get below that 1700, I'd be looking for a move back into the microcomposite VPOC at 1695.75, with the other side of balance being the CLVN at 91.75, which is just below the value area low at 1692 here. Below that, everything shifts into this this undetermined fair value around the 2013 VPOC, composite VPOC. The most accepted price of the year is 1678.50. Of course, it was 1680.25. Then it shifted to 1675. Then it shifted back to 1678. So we have undetermined fair value down here in around that 1678 composite VPOC, and I'd expect a move back into that area if we can't hold that 91. I'll be using 87.50 to get aggressively short towards this 1678.50. And then the other side of balance and the line in the sand that we were watching for the move down to the 47 was that 1665.75. So pretty clear cut. If we stay above, look for a rotation back up into that 1775 area. If they hold value and accept value up here, then I'd be looking for a move to take out the RTH high at 1723.75, equalize the Globex high and the all-time high at 1726.75, and then possible move, higher. We've got that 1780 area as a measured move above. 1740 is also a number that I've been watching based on those geometric charts. Going over to the overnight, let's get our overnight numbers shifted to our trading chart. Of course, we've got an overnight high of 1715 and a quarter. We got an overnight low of 1706 and a quarter, just above or just below the range high from yesterday at 1706.50. So they got down a little bit lower than, tried to break back into yesterday's range, and then the buyers stepped in to hold us up so far. Now we could go down before, we still have time to go down and put a new Globex low in, but right now I'm just going to put it in at 1706 and a quarter. And you've got this area of rejection right here that basically runs from 1705 down to 1705, and I'd be using that 1706.25. If we can get below there, then I'd be looking for a move back down to test the value area high from the prior day at 1708.50. A trade area for me is going to be the 1706. Because of, let me just put the VPOC in too, sorry. Overnight VPOC is at 1150. At 1706.25 is the area that I'll be watching, because it gets us down, below the upper distribution. We went up and held value up there for the rest of the day. If we get back below here, then I'd be looking for a move down into the upper distribution of the prior day. We've got a naked cross down here at 1699.75. We've got another one at 1699 that was put in overnight. Of course, we've got the naked VPOC from Tuesday at 1699.50. We've got a naked cross above us at 1711.50, which is basically right on the overnight VPOC. So I'll be doing business in the 1706 area, looking for responsive buyers to step in and hold us outside of that prior range, and get us back up into the distribution for the afternoon. It's a pretty wide range, so you got to be really careful in this area and watch your dome and watch the how they're printing around it. In the upper distribution, there really isn't much there. You got the value area low at 1710.50. You got the value area high at 16. You've got the gap, which will be 1713.75. So you got basically about a 7-point gap right now. So I'd be looking, the first area of resistance I'd be looking at is that 1710.50, which is the the afternoon swing, near the afternoon swing low, and the value area low. That'll be another area that I'll be doing, looking to do business. And then the other area is going to be up here at the 1700 area for a move to back up into that 1775 and possibly go test the other side of balance up there at 1720. But other than that, I'd be very careful trading in this area, especially with with the headline risk right now. It could get really bumpy. Take a look at the Renko chart with the Keltner. Currently, it's showing us that we've got weakness and a down channel. Test of the center line will give us 1710. That's the value area. Low at 1750. So that's a good confluence there. Upper test of the Keltner is 1716. That will bring us up to test the value area high with the overnight high. And then value area low is 1703.75, which is going to put us into this HV area for yesterday and possibly come down and test the the range low for yesterday at 1701.25, and then we've got that confluence of naked crosses and naked VPOCs, and then just below that we've got naked crosses at 1695 and a quarter, 1694. This should not be there. Now, if we get serious weakness, I'll be going back over to the composite, and I'll be watching this. This should actually be 1693.50 as an area to do business, with a move below that down to what day that was. I think that was Monday's naked VPOC down at 1688.75, and Tuesday's range low at 1689.50. Take a quick look at gold. Yesterday we were talking about the holding that 1260 area, 1250 area, and then a move up towards the what was the microcomposite that we were trying to hold value at 1268, and then with the upper targets at 1284.90 and 1300, the other side of balance 1304, and then up to the prior microcomposite at 1318 area, and we did that overnight. They had a big move overnight, and we're now back up into this distribution around the prior microcomposite balance that we were in and fell out of. So right now, I think the numbers that you want to watch is the 1304, the 1300, 1296 below. If we get below that, look for 1284.90 and 1268 area. If we hold up in this area, I'd be looking for a move back towards that 1223.40 value area high, and the former microcomposite at 1325, and around the CHVN at 1324, with the other side of balance being that 1337.20. If we get above that, resistance at 1345 and 1351, with the two targets above at 1366, and the big one that I got my eye on at 1387, 1388 area. So that's what I'm looking at on gold. All right, Howard, over to you.
Thank you, Doug. We'll start with the monthly chart, and with our recent push higher, we've actually come up and touched this 20-year median line on our fork. So with the exception of June, we've had a touch of it each month since May. So, multiple touches. We'll see if we still find resistance here at this line, but significant level here. Let's go to the weekly. We have a gap up from yesterday, or last week I should say, and so far we're holding below that same fork line. 9 EMA has been holding resistance over the last few weeks, or support I should say. Let's go to the daily. Okay, yesterday we did come and test the 9 EMA pretty much to the tick, held support, came up and tested the fork line, and so far during the Globex we've retraced a little bit. So these two levels look to be good support and resistance levels to watch for today. 9 EMA is currently at around the 1694 area, fork line at around 1716 to 1717. So let's go ahead and look at market breadth. Our on-balance volume is in sync with price, pretty much making its turns when price set its high of the year, also when it set the recent swing low. So on-balance volume is in sync with price. the industrials versus transports. Still in sync there. Transports has shown greater strength than the industrials, has been increasing its separation. Looking at the sectors. With the rally yesterday, it looks like all of the sectors were on board. So no non-confirmations there. So now we'll look at our advanced decline versus up-down volume. So we had, had an interim high on our advanced declines in the middle chart and up-down volume in the lower chart. Both of those are on a 10-day average basis, where we had gone above the break-even level of 50%. Then with the move down on the 15th, they both moved down below the 50% level, and with yesterday's rally we have a lower high. So the strength is not quite matching price here, so this will be something I'll be watching out for to see if we continue to get follow-through, if price goes higher, how the market breadth responds to it. So that's an area I'll be looking for. That's our first real minor non-confirmation. That breadth is not following price, but we need to let it play out a little further to see if that non-confirmation holds or whether it's just a temporary blip. So with that, Doug, there's just over 10 minutes left before open. I'll turn it back over to you.
Thanks, Howard. All right, so just to recap, 1706 and a quarter is my my uncle line. If we get below that, I'm looking for a rotation back down towards the 1703.75 and a test of the lower Keltner channel, and a move down to test the range low at 1701 and a quarter, and then below that naked VPOC. Did we put in a new lower low overnight? Where's my? Just want to make sure that.
Not quite yet on the DS, but it looks like we did on all three other indexes.
All right, so just keep this in mind. We're talking about the 96% rule of taking out the overnight low or the overnight high. Obviously, the probability is to take out the overnight low with our proximity so close. So I'd be thinking that we might see a break below that 1706 and a move down to 1703 and 1701 and a quarter, and possibly down to find buyers and pick up responsive buyers down at the former VPOC and take out these naked crosses. That's my current hypothesis. If we hold the 1606.25 and we see buyers step in on the open, I'd be looking for a move to go up and take out the or test the value area low as first resistance, and then move up to close the gap in the naked VPOC, and we've got a naked cross with the overnight high just below the value area high, and then just a drift higher. So the key area is going to be the 1706. Once we get up into this area, above that 1710, it's going to be hard to find a spot with good edge. So just be careful. And try not to jump into trades up here because it's getting, you can see how toothy it is on the profile. That's going to complete our morning session. Again, if you're new, you can, and you want to check out the Quantum Leap room, you'll need a Skype account. It is free, and then send me a contact request at Doug_McKay at, I'll be the one from Windsor, Ontario, Canada. As always, trade well, trade safe, and we'll catch you on the flip side.